Hi traders, thanks for stopping by thetradinganalyst.com. This is Taylor and we're going to take a look at a recent trade that we took here that I alerted profitably to the members here at thetradinganalyst.com via text message and private Twitter, as well as that I took on my own. And the idea here is to show you some that we use on a regular basis, so that you can in turn use these strategies to help you in your own trading. But first, if you're not already a member at thetradinganalyst.com, go ahead and give us a visit on the homepage of the website and get to know us a little bit better. If you like the free videos and analysis, as well as the profitable trade reviews like the one that we're about to show you right now, it's nothing in comparison to the membership you get once you sign up for that premium membership. Once you sign up for that premium membership, you're going to gain instant access to the profitable trade alerts like the one that I'm about to show you on these SPY options. It's a great opportunity and we'd love to help you with your trading. Alright, so let's take a look at this SPY trade. So first and foremost, this was a day trade. We take both day trades and swing trades here at the Trading Analyst, primarily swing trades, but when we see an opportunity for a day trade, we take them. So looking at the daily chart, again, this was a day trade, but we're using the angles of the S&P 500 daily chart here. So you can see this main trend line here going back to before this year, so December of 2016. You can see we got a bounce here, there, here, right there, right here. You can see we got a bounce here, and then we broke through it right here. Is that trend line break? You can see, try to break through it on this day, couldn't quite do it. We also have the red line here, which is the 50-day moving average, which you can see we're struggling with as well. So not only that, but we saw a gap up on the day. And with this stalling out action, I thought it's most likely this gap below is going to get filled today. So we're going to look at the 15-minute chart now. And we still have these same lines here on the 15-minute chart. You can see this is that major trend line that we broke below over here. And you can see, tried to break through it here, couldn't, retested it here, and again, you can see this is really following this angle. We not only have that, but we have also this downtrend line. I'll show you on the daily chart really quick. Again, so we've got this downtrend line starting from this high, lower high, and I drew it like there, and it's the top end of this channel line. So we're in this channel. So we're coming up to the channel, we're looking for a rejection. So we didn't just short blindly, we wanted to see it react to this level. Okay, so we don't just short at a level, we want to see how it reacts to that level, because these are just my lines drawn on the chart. Okay, this isn't a real level or anything like that. Again, so you got to see how is it reacting to your trend line. Okay, how is it reacting to your support or your resistance? If it's not reacting to it, it's not a support or resistance, and it's not a valid trend line. So not only do we have the underside of this trend line, but we also have, you draw a Fibonacci retracement from the previous high over here down to the low over here. It's right up here at the 61.8 Fibonacci retracement level. Alright, you can see we reacted to it here, and we're coming up to that level right there. So not only was it that trend line, but it was also the 61.8 Fibonacci retracement level, as well as just coming up here and filling this gap that hadn't filled yet. We gapped down here, tried to come up and close it that day, couldn't do it. Next day, tried to do it, couldn't do it. So up here, we gapped up, came up here, filled this gap. So again, we've got three reasons. Gap fill, previous high. Okay, this is four reasons actually. Gap fill, previous high, trend line, as well as the 61.8 Fibonacci retracement level. So we've got a lot of reasons here to like the S&P 500 for a short. So what we did is we waited to see if we saw some kind of inverted hammer or some kind of topping tail. And so we got that because we had this pop up here with this little topping tail on this second opening candle on the 15-minute chart. But then, and this is definitely not enough reason for me to short right there. So I wanted to see, and we hadn't filled the gap just yet. So then we came up here on this candle right here, we filled the gap, and then you can see we ended up closing below the previous candle's high right there with a inverted hammer right here. So you can see how long that tail is. This is a rejection candle, okay? Now, doesn't always lead to lower prices, so you really want to get confirmation. You know, it's dangerous to just, if the only reason you're shorting is based off of an inverted hammer or a hammer, that's really not good enough of a reason. You need a lot of other reasons. So we had a lot of other reasons. We got that candle. So this is where we got short here. We got short here on some put options here. And I'll show you this alert that we did. Trade alert, the S&P 500, August 30th. So this was the next week's call puts. So not the current week's, but the next week's. I like to trade the following week's options because you get a little more wiggle room and you don't have theta is not as much of a factor. So we alerted those, the 245.50 strike puts at 93 cents. All right, and again, these are alerted not only on the private Twitter feed, but at the same time via text message, because not all of our members, just like you, are able to sit in front of the computer screen all day long. So the text alerts are great to make sure that you get into the trades and you don't miss out on winning trades like this one here. So we got the puts here, and our first target here was the low of the day. All right, we wanted to get the low of the day tagged, and so we ended up getting that tag here. We alerted the puts here, and we sold half right here at the tag of the low of the day, and you can see right there out of the puts at 120. So that was about a 30% win approximately right there on that half sell right there. So nice little gain there for us. And the reason we targeted here just the low of the day on half is because, you know, when you get a gap up, typically, you know, that is a bullish sign, okay? So you don't want to fight the tape too hard. So we wanted to make sure to pay ourselves right here at the low of the day on half, all right? So then we ended up using a trailing stop at this point for break even. So we sold half at 120, and if for some reason it would have gone back up here, we would have sold the other half at 93 cents right where we bought it before, because we don't want it to turn into a losing trade. So if that would have happened, it still would have been a 15% gain. But it ended up breaking lower here, and our second target was going to be the gap fill right there, unless we saw some kind of a reaction here at this previous resistance, which is now support. So right around here from that previous candle here, also there's a Fibonacci retracement level here right there from the lows of yesterday to the highs of today. You can see the 61.8 right there. So we wanted to see if it was going to react to this level. So if we saw, I'm just going to delete this to kind of clean up the chart. So if we saw some kind of a reaction at this level, meaning, you know, a hammer, a spinning top doji, something like that, then we were going to take profits on the rest of that trade. So we ended up getting that. and on this candle right here, and we ended up selling these puts on this candle here, but near the lows of this candle, and you can see that we sold the last half at 140, which is about a 60% win, if I'm doing the math correct here. So we got a 60% win on the last half. So that was about 30% win and a 60% win on this trade. So very nice trade here, and it ended up working out perfectly. You know, we got that rejection, we took profits here, and then we ended up selling here right at the right time. It doesn't always work out that way. I'm going to tell you, be very honest with you. It doesn't always work out this way, but this is a very nice trade for us, and it worked out nicely. The point is here is you stick to your method. Okay, we have a very consistent method that works. Okay, that works oftentimes, and not only that, but we are very disciplined and we stick to our stops and we stick to our targets. Okay, we're not greedy and we're not fearful. All right, you want to get those emotions out of your trading, and we do that here at the Trading Analyst. I'm guiding you through the market, guiding our members through the market, and showing how a disciplined trader can profit in the market. So thank you for stopping by and watching that video. Hopefully you learned something from it and you can take it into your own trading. If you'd like to sign up for the premium membership and receive profitable trade alerts like the one that I just showed you now on those SPY options, then go ahead and sign up right now, and you're going to receive instant access to trades like the one that I just showed you right there. It's a great opportunity, and we'd love to help you with your trading.